Dividends are a way to reward stockholders, and there's two types of dividends I'll talk about. First, stock dividends and cash dividends. So, stock dividend, let's assume a company has 1 million shares outstanding and they decide to declare a 10% stock dividend, meaning that they are going to issue 100,000 more shares, 10% more. What's important to understand about a stock dividend, it does not change stockholders' equity. No dollars are going in or out of the business. So what happens is, if you own 100 shares, you're going to get 10% more, or 10 more shares. So you own more shares, the number of shares outstanding goes up, but the share price is adjusted downwards so that net there is no change in stockholders' equity. So that is a stock dividend. Most people know about a cash dividend. So let's talk about a cash dividend to common shareholders. Let's assume that shareholders of record October 1st are going to get a $1 cash dividend per share. So what's happening here is that the company is keeping less of their earnings. They are paying out earnings in cash. So cash is going out the door, the number of shares outstanding go up. So that is for a common shareholder. I'm trying to make a distinction between common shareholder and preferred stock, a preferred stock dividend. Stock is preferred. Preferred stock is better, quote unquote, for two reasons. The first is that you're first in line in priority to get a dividend. And the second is, if the company should liquidate and people are in line to make a claim on assets, the preferred shareholder is in line in front of the common shareholder. So let's talk about just the stock. So if there is a preferred stock, a dividend, and there's also a common stock dividend, but there's not enough money to pay both, the preferred stockholder is going to be paid first before the common shareholder. There is no obligation to pay a common shareholder a dividend ever, so that should be something important to point out. There's another one called cumulative preferred stock. Cumulative means that the entire preferred stock dividend has to be paid before any other preferred shareholder or common shareholder gets paid. So if it is a $10 cumulative preferred stock dividend, that $10 has to be paid before any other preferred shareholder gets paid, any other common shareholder gets paid. The last one I'll mention is participating preferred stock, which has some features of additional equity in addition to other payments. So remember that big misunderstanding that you can get both a cash dividend and a stock dividend, and the stock dividend does not change total stockholders' equity.